Hi friends, welcome back to the Big Joy of Learning with Bijoy Ji. Let's continue with Money Matters Simplified. Today we will learn about bank lockers and the gold monetization scheme. Gold, the ultimate symbol of wealth and security. But did you know that keeping gold in a bank locker might not be as safe as you think? In this video, we'll uncover the hidden risks of storing gold in bank lockers and introduce you to a smarter alternative, the gold monetization scheme. Stay tuned till the end, because you might just rethink how you store your gold. Many of us believe that keeping gold in a bank locker is the safest option. But let's take a closer look at the drawbacks. High locker charges. Banks charge annual locker rent, which varies based on the locker size and bank policies. Over time, you may end up paying a significant amount just to keep your gold locked away. No compensation for loss? Here's a shocker. Banks are not responsible if your gold is lost due to theft, fire, or natural disasters. Unlike your savings account, your gold is not insured by the bank. Limited access. You can't just walk into the bank anytime to check on your gold. There are limited working hours, holidays, and even restrictions on how often you can access your locker. Legal complications. In case of the locker owner's death, legal heirs often face a tough time claiming the gold due to documentation and legal procedures. Risk of inactivity seizure. Did you know? If a bank locker remains inactive for several years, the bank has the right to break it open after due process. The bank is responsible when a loss occurs due to the bank's shortcomings, an act of commission, omission, or negligence. In addition, banks are responsible for any of their employees' fraudulent activities. In such scenarios, the bank is liable to pay an amount equivalent to 100 times the existing locker's annual rent. For instance, if the annual bank locker charges are 4,000 rupees, the bank is liable to compensate the customer up to 4 lakhs rupees. Let's see the bank locker rules in case of theft. The banks are responsible for any damage or loss of the locker contents due to the bank's carelessness. In case of scenarios like fire, theft, burglary, robbery and dacoity arising due to negligence of the bank or fraudulent employees, the bank is liable to pay the customers an amount equivalent to 100 times the current locker's rent. For example, if the locker charge annually is 1,000 rupees, the bank must pay 1 lakh rupees to the customer as compensation due to the bank's negligence. Bank locker rules in case of death. The customers must ensure that they register for the survivorship clause and nomination facility when they open a locker at a bank. Here are the bank locker's new rules in case of death. If the customer has nominated a person, the bank gives the nominee the access and ability to remove the locker's content after the hirer passes away. For lockers hired jointly with instructions to operate under joint signatures and the hirers appoint nominees, the bank allows them to operate and remove the content jointly. Suppose the hiree hires a locker with a survivorship clause and instructs the banks to give access to the locker to anyone or survivor, either or survivor, former or survivor, or other survivorship clause. In that case, the bank follows the mandate of one or more during the death of locker hirers. Now, instead of keeping gold idle in a bank locker, what if you could earn from it? Enter the Gold Monetization Scheme, GMS. What is the Gold Monetization Scheme? Introduced by the Government of India, GMS allows you to deposit your gold with banks and earn interest on it, just like a fixed deposit. Advantages of Gold Monetization Scheme. Earn interest on your gold. Your idle gold earns interest, typically 2% to 2.5% per annum, which means your gold grows in value over time. No storage hassles. No need to worry about locker rent, theft, or damage. Your gold is safely stored by the bank. Flexible tenure. You can choose short-term, 1 to 3 years, medium-term, 5 to 7 years, or long-term, 12 to 15 years, deposits based on your needs. Get your gold back or cash. At the end of the term, you can either take back your gold in the form of bars or get the equivalent value in cash. So, what do you think? Is your gold safer in a locker, or is it smarter to earn from it through the gold monetization scheme? The gold monetization scheme is a way to earn interest on your idle gold. Continuing with the topic on language of money, we'll talk about some key financial terms everyone should know. Financial literacy begins with understanding the language of money. See you soon. This is Darpana signing off for now. If you found this helpful, don't forget to like, share, and subscribe to The Big Joy of Learning. Money Matters Simplified. Learn, grow, prosper. Have a big joy of learning.